Welcome to Illuminati Silver. We tell the truth about silver. Today is Thursday the 17th of March 2016 and we're briefly covering the ramifications of the Fed not raising interest rates yesterday. After a two-day meeting, the Federal Reserve held interest rates steady on Wednesday and cut the expected pace of future monetary policy tightening as a weak global economy caused some concerns. The bank said that a moderate economic expansion and strong job gains would make it appropriate to hike rates over the year. It appears that policymakers are now comfortable with 2 quarter-point rate rises by the end of 2016. Janet Yellen, the Fed chair, stated, quote, "I am wary and have not yet concluded that we have seen a significant uptake that will be lasting. The US economy has been very resilient in the face of shocks. That is important. Proceeding cautiously will allow us to verify that the economic recovery remains on track." Once again, concerns over Japan, Europe, and the ongoing slowdown in China dominated their discussions. Tom Porcelli, chief US economist at RBC Capital Markets in New York, felt that the tone was, quote, "more dovish," unquote, than the markets expected. The dollar fell sharply against a basket of currencies after the statement. Yields on US Treasuries dropped across the board, while stock markets rallied. The S&P 500 closed at its highest level since December 31st. In terms of statistical data, policymakers projected weaker economic growth and lower inflation this year, and lowered their estimate of where the targeted lending rate would be in the long run to 3.30% from 3.50%. Unemployment is expected to fall to 4.7% by the end of 2016 and again further in 2017 and 18. Forecasts for inflation were also marked down for this year to 1.2% from 1.6%, but see it recovering to close to the central bank's 2% medium-term target next year. Gold moved up rapidly on the news from around the $1,229 level to $1,260 and is currently standing at $1,265 an ounce. And silver also jumped from the $15.22 level to $15.60 and is currently standing at $15.66. The dollar index fell from around the 95.7 level and is currently standing at 95.1. So we can see that, as we stated in January, the Fed is unlikely to raise rates 4 times this year and have downplayed their predictions to twice. While some are saying they won't raise rates at all, there is still the possibility of perhaps 1 quarter-point raise later in the year, in our view. Meanwhile, we are watching other countries to see their response to this and are looking out for any further increases in negative interest rates. The Fed is playing quite a clever game. They are achieving slight dips in the value of the dollar to help exports and the stock market, not by reducing rates, but by building up expectations of higher rates and then dashing them. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at www.illuminatisilver.com and look at our Facebook page, which is updated daily at www.facebook.com/Illuminati Silver. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.